About 3 years ago, I was really curious about this thing called Bitcoin. I knew a little bit about it, but not enough to really make some decisions. So I came across this guy here, and his name is Michael Saylor. And I started watching his videos, and I realized this guy really has got an engineering approach to Bitcoin. And so I dove in, and I've probably spent 1,000 hours now learning about Bitcoin. And I teach about it, and I talk about it, but this is not a Bitcoin video. But this is a video to show you that you can make money off of Bitcoin whether you own Bitcoin or not. And you can make a lot of money with a company that Michael Saylor has called Microstrategy. And I'm going to talk about how to make money using covered calls with a company called Microstrategy. The numbers are crazy right now. You got to do some research. And I'm going to help you start that research off here. But first I want to introduce you to Michael Saylor if you don't know who he is. Just a quick little blurb about how he discusses Bitcoin. So take a look. Here we go.
Before Bitcoin, you would have bought bars of soap, crates of toilet paper. You would have bought motorcycles. You would have bought a Humvee. You would have bought barrels of oil. You would have bought anything. You would have bought food. You would have bought bullets. You would have bought guns. Anything tangible that you can self-custody, you would have held. Now, after Bitcoin, you now have, for the first time in human history, the ability to buy not a barrel of oil, but $80 worth of Bitcoin, and you put it on your phone. And now you can go through an airport with the Bitcoin. You can't go through the airport with a barrel of oil.
So that's Michael Saylor, and you can go down a rabbit hole with him. The guy does 3-hour talks, 2.5-hour podcasts. He is the biggest proponent of Bitcoin, and it is paying off. And it's paying off in this company called Microstrategy. So I've created a plan to discuss how do we take Microstrategy and really make some money on it. And I sell options all the time. And to me, that is the best, safest, and most reliable strategy to create income in your account. Better than real estate, better than having an Amazon store. This to me is the way to do it. And it's easy. It's not simple, but it's easy if once you do it. The goal is to create $10,000 a month. And if you have an account size of $200,000, that's a pretty good sweet spot for what we're going to do. But if you don't, modify your own math. I can't address everybody's math here. We're going to use covered calls, which is my favorite system. And then we're going to use a hybrid strategy, which I don't talk about a lot because it confuses people. Hopefully it's not going to confuse you. I'm going to make it really simple today. And Microstrategy is an amazing company. You can see if you go back on the left side of this chart over here, you can see the stock was worth about 10, 12 bucks, something like that back in the 2020. And then in 2021, it really took off for me. And then you could see it took off along with the stock, right? So the stock went from 12 to 80 or 90 or 100 or whatever it is in there. And then it had a big drop back down as Bitcoin had a drop too. Now this guy, Michael Saylor, took this little company called Microstrategy. He's one of the longest tenured CEOs in the market. And it was a little computer company. And he's been just plugging away on the NASDAQ, trying to make money with this company, been profitable. And he saw an opportunity. And he said, you know what? I'm going to pivot my company, at least from a financial engineering perspective, into Bitcoin. And he has just been amassing Bitcoin. And now he's one of the largest holders, him and his company are one of the largest holders of Bitcoin in the world. It's affecting his stock, right? So what he does is he does this simple arbitrage strategy where he goes and borrows money, gives people a decent return on the money, competitive market rates. He gives them 3 years ago, he gave them 2%. And then he gave them a convertible bond, which basically converted it into stock if you wanted to. And so if Bitcoin continues to go up, he has this 2% money that's financing the purchase of Bitcoin. And so he's got an accretive income yield coming in because of his financial engineering. I'm not going to get too much further into that, but he borrows cheap debt, right? Even now it's cheap debt for him. Sometimes at zero. He gives bondholders sometimes zero, but it gives them an option to buy stock. So he buys the Bitcoin goes up. Bitcoin keeps going up, which as long as we continue to print money as a society, the value of the dollar will go down. And if you keep borrowing in the dollar and put it in Bitcoin, as Bitcoin goes up, you get a multiple return. That's the bottom line. Okay, let's look at the chart. So you can see this chart lately has got this little consolidation in this area right in here from about 200 down to about, let's call it 120. There's a little consolidation where many months it just kind of went back and forth, and then it kind of broke out to the other side, and it's right now on a 6-week breakout. Now, I think the stock over time is going higher. Now, I don't know what it's going to do next week or tomorrow or next month. I don't know anything. All I know is that the trend is in place for the stock to go higher. And if you've been watching this channel or you've been watching anything that I talk about how Bitcoin is going higher. Now, I don't try to make a prediction for next week. What I will tell you is that in the next 5 or 10 years, Bitcoin is going to be worth in dollar terms $500,000 to $1 million per token, per coin. And so the trend to me is up. It's digital currency, it's digital gold, and I think the future of Bitcoin is stronger. And once some of these countries and companies start to adopt it, it's going to go up. And so I think Microstrategy, because they continue to buy more Bitcoin and put it on the balance sheet, is going up as well. And it's on a breakout right now. In fact, it gapped up last week. Okay, so we've basically set the bar for we are in an uptrend, right? I hope you can see that uptrend is in place, right? From $10 to $340, okay? Now, we've got that uptrend in place. What do we do about it? How do we make money on this? Well, we could buy the stock and just forget about it and hope that we're right. I don't like to do that. I don't believe in buying and hoping. I believe that you have good strategies in buying stocks and then good strategies on creating income from those stocks that you buy. Now, MicroStrategy is on the upper end of volatility and risk. And so this is not like buying IBM or Exxon. This is buying a stock that's got some volatility, but it pays you for that volatility, as I'm going to show you here. So here we go. But before we get into that, I want to talk to you real quick about why most people fail. First of all, most people fail because they're trying to hit a home run all the time, right? They don't realize that the money is not made overnight, it's made over time. And so if you allow time to be your guide and time to be your partner, then you're talking about making money. And so don't try to hit home runs, hit singles. Get on base. Those are the people that are in the Hall of Fame, the ones that get on base, not the ones that swing for the fences. Okay? But the problem is most people don't have a system for that. Like, they don't know what they're doing. They think it's easy to make money in the market because their brother-in-law told them they made a killing on it. But it's not easy to make money in the market unless you have a system. It's a little easier with the system. It's certainly not foolproof. Secondly, they don't have a trading plan. You better have a trading plan. Okay? That's like my number one advice is like sit down and do a written trading plan on how you're going to execute your trades. What happens if the market goes up? What happens if it goes down? What happens if the stock goes sideways or down or up? What are you going to do? Okay? And then third is the reason you have those first two is because you want to eliminate emotion. And this is the problem. Emotion is the enemy of the trader. When emotions go up, intelligence goes down and vice versa. And when, I don't know about you, but I don't make very good decisions when I'm emotional. When I'm unemotional and can think logically about things, I make better decisions. Yeah, I pull a little intuition in there as well, and that's a bit of emotion. But you're trying to get the emotion out of the trade because you're generally going to do the wrong thing when you're emotional. So those are the three reasons that most people fail that I've been able to identify. Now, we have a program called the Cash Flow Machine, and in the Cash Flow Machine, we try to choose the right stock in the right market at the right spot on the chart, and then we squeeze the juice, okay? So that's the 4 parts of what we're doing here. That's the beginning of our plan, right? We try to choose the right stock. Well, is MicroStrategy the right stock? It is for this environment. Now, it could be a little bit extended this week, but I think the stock over time is going to be going higher. That's why I'm positioning this whole video for you, right? Are we in the right market? Well, yeah, the market's green. It's pulling back a little bit, but in general, we're in a longer-term uptrend, and so I like that. Is it at the right spot on the chart? Well, frankly, no. It's a little extended. So I'm making a bit of an exception to paint the picture for you that maybe it's extended, but maybe there's more to go, because I think there is more to go. And I don't know if it's this week or next month, like I keep saying. And then we squeeze the juice. So the rest of this video is going to be all about how we're going to squeeze the juice. So the plan goes something like this. We're going to do step 1. We're going to buy stock and we're going to set the targets. So let's take a look. We're going to buy 400 shares. The stock right now is trading at $340.65. We buy 400 shares. That's 137,100. Okay, it's less than the 200,000 we talked about. So you can get into this position with 400 shares. The next thing we're going to do is we're going to look at our call options. Now, if you're new to this, a call option is the right, but not the obligation, to purchase something before a predetermined date at a certain price. So a strike price, you might hear me say strike price, of $340 means that if you own the option, you have the right, but not the obligation, to buy that stock at $340 before it expires. In this case, I'm talking about options that go out for about a month, 27, 28 days, something like that. And so, but that's risky, right? If you look at the option on your screen at the 340, you're going to be spending $46.25 to have the option. What does that mean? It means it needs to go to $386.25 for you to even break even if you're the buyer. That's a big risk, right? That's a lot of risk. In fact, most options that are bought expire worthless. So let's be on the other side of that transaction. Let's be the sellers. And what we're going to do here is we're going to look at two different strike prices on this, and we're going to do what I call a hybrid strategy. So here's how the hybrid strategy works. I don't know if the stock is going to go up or stock's going to go down, so I'm going to try to hedge myself in both directions. I'm skewed to the upside, but if it doesn't go up, that's okay. There's an app for that. So here we go. So I'm going to look, the first thing I'm going to do is I'm going to go to these 375s right here, okay? I see the 375s are trading for about 35.45 to 40.25. So it'll probably be somewhere in between there, but let's be conservative and say it's $3,545 per contract. You can see that's all juice, that's all time value, okay? Or extrinsic value. Now, that's what we're going for. That's our income. And so if the stock could go up $35 and we'll get dollar for dollar that increase. Plus we'll also get another $35 for the juice. So we add that together and we end up getting a ton of money, the $35 for that plus the $35 of increase. It's about $70 if it goes up. Now, what if it doesn't go up? Well, we're going to do the second option. So we're going to do two different options. That's why I call it the hybrid strategy. And so we're going to say, well, it could go down to 310. Let's say there's that range of 310 to 375, which is probably likely in the next month that it trades inside that range. I don't know. I got to make some assumptions. And so what we're going to do here is we're going to go for this juice, $29.40 per contract, $2,940 a contract. But the difference is we're going to get $5,940 in the money plus juice. So we're going to get $5,940 total back into our account. Now, what could happen? Well, if the stock drops down to 310, we still haven't lost any money. If the stock goes down 59.40 is where we start to break even on those 200 shares. Does that make sense? So we buy the stock, but we're putting back $5,940 per contract into our account. $2,940 of that is juice. That's our income. So when we put it all together, we've got two contracts. I'll show you how the math works here. So step two is we're going to sell the call options that I just talked about. The first one is we're going to sell two of the 375s. Okay, those are $3,545 at $7,000 is how much that works out to be, right? So we get $7,000 into our account, and since that's all out of the money, that's all juice, okay? We get two contracts worth of those. We also are going to sell two contracts of the 310s. Now those are in the money, okay? And we're going to be getting $29.40 times 2, which is $58.80, and the juice basically turns out to be total, if you add both of these, $7,000 and the $58.80, is $12,970 per month worth of juice. The juice is the income. The income is a time premium. The time premium is extrinsic value. It's the out of the money amount, right? I call it the juice. Quicker than all that other stuff, right? So that's what we're going for. Is we want to get $12,000, $13,000 a month in juice. Think about that for a second. We started out with a goal to make $10,000 a month, but this stock, because of its volatility, it's got heavy volatility, so it could go down very quickly as well. You're going to be getting $13,000 a month. Now, if it continues to go up, great. And you can make money on the way up because you got two of your contracts exposed for the upside. But if it goes down, you got a little bit of downside protection on the other two contracts. Make sense? Okay. You starting to get this? I hope you're getting this. Now, here's the math. We're going to buy the stock like we talked about. That was step one, $137,400, right? Then we're going to sell the calls. The 375s, we're going to get $7,090, but the 310s, it's not just the juice that we're getting into the account. Those are going for $59.40 per contract. We're going to do two of those contracts, so we get $11,880 back into our account. Now, not all of that is juice, so that's not the income. Don't be fooled by thinking that's the amount you make. That's the amount that you use for cushion. So you basically bring into your account $18,970. That's the amount that you bring into your account, okay? Now, that brings your basis down, the money out of your pocket, from $137,000 to $118,000, or $296 per share, right? So if this stock goes down to $296.08, you still haven't lost any money because you brought all of this juice plus intrinsic value into the account. So the stock could go down to 296 and you're still okay. If Bitcoin goes down, MicroStrategy will probably go down in sympathy, although it hasn't been happening quite so much lately. You got it so far? Okay. So the return on investment, because this is the way you compare apples to oranges and get them all together, is that you're making $12,970 in juice divided by the $118,430 that you put out of your wallet. This is what I call fun math. It's cash on cash math. How much money do you take out of your wallet versus how much do you get back in on that money that you took out of your wallet? Yes, I double count it, but it's fun math. And that works out to be about 11% a month. 11% a month times 12 months, you do the math. That's more than 130% a year. Now, in 10 months, your position is paid for if you want to look at it that way. Make sense? Okay, so let's go through what are some potential risks, because I'm starting to talk about that a little bit more. And a stock like MicroStrategy can move like crazy. If you can't sleep at night, don't do this trade, or do it way less, right? This is going to move on you. You got to have the emotional muscle to be able to handle this trade. Okay? Here are the potential risks that we'll talk about. First of all, if the stock goes down, you have to adjust your position. Okay? Be ready. Have a plan. Have it in your trading plan. Where am I going to adjust the position? At what spots? What is my defensive strategy? Okay? So if it goes down, be ready. Okay? It's not so much if it goes up. There are some things that you can do. If the market goes down, you got to be ready to make a trade adjustment. If the market goes down, 70% of a stock's movement comes from the direction of the market. So if the market's going down, chances are MicroStrategy is going to go down too. All right, you must have a trading plan. I say this all the time, and you have to trade it unemotionally. You can't have something happen and they go, oh, forget the trading plan now. Now it's the real stuff. No, you've got to trade your trading plan because hopefully you drew it up when you were unemotional. Okay? And then if the stock goes up, you're going to need some working capital to buy it dollar for dollar above the strike price. Now, it's going to go up dollar for dollar on the base position too, so that's not the worst thing in the world. And right now it's at 340.65, right? Something like that. So if it happens to move up to the, to that level, you're going to end up making like, $60 more on the base position. Okay? And you'll lose $25 over the strike price of the 375 position. Okay? And the difference is what you get to keep, plus you get to keep the juice. All right? There's no free lunch. I know this sounds too good to be true. That's the thing I've been fighting with all my life. In fact, when I first read this book, Beat the Market by Edward Thorp, when I was a kid, and I was like, oh my God, why wouldn't I just borrow all the money that I possibly could and put it into this, right? And I came up with these schemes with my dad to lend me money, and I came up with, all my pool cleaning and lawn mowing money, and I put it into this kind of stuff. And I was like, if I could just get some leverage, I realize that's a mistake now, but if I could get some leverage, I could make a lot of money. I did. I had some good trades. All right, so there's no free lunch in the market. So the bottom line is you've got to be careful, but you got to make this fun, right? Don't trade too big that this isn't fun. Don't trade too small so you don't make any money. Look at opportunities like this as opportunities to have some fun, because making money, if you know what you're doing, if you have a system, is like, wow, you kind of feel like you got the secret sauce, like you got the advantage over the people that don't have a system. All right. So I hope that helps. We achieved our goal, right? We wanted to make more than $10,000. We had less than $200,000 to invest, and that worked out pretty well. $137,000 is where we started. And then we brought that down even more by selling calls, using our hybrid strategy. I teach people how to do this all the time, every week. And most of the time, these courses that I have, these masterminds that I have, they pay for themselves in a few trades. And that's what I'm really proud of, is that, I get to help people. And even some of you that are giving me comments about, hey, what do I do if this happens? I really appreciate that, because it shows me that you actually are watching the videos, that you care, and that you want to learn. And that's all I want to do, is I want to teach people. So if you really want to learn a different strategy on how to do this, take a look at this video right here, which you can just click on it right now and go to that video. If you want to join my mastermind, or if you want to learn by taking a course, there's some links below. Or I even have a newsletter. It's free, called Insider Tips. You can click on the link below, and I'll see you on the inside. Hey, it's Mark Yegi here to tell you about our cash flow machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for 2 to 4% a month of income and growth in your portfolio. And we have courses to teach you how to do this yourself or inside a mastermind community. And the best part of that is it only takes about 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA from $111,000 to over $500,000 in just 19 months without huge risk. I'm not telling you this to brag, just to show you that you can do this too. So to learn more about this program, go to cashflowmachine.io. That's cashflowmachine.io, and you can learn more.